Hi, Zach Bassett with COS Accounting and Tax, doing my videos in conjunction with my compounding interest podcast. Hope that you guys like it. This one's going to be on vehicle purchase. So this is really more important for those that are on a 1099. If you're on a W-2, it's still important to kind of plan things out. But as far as taxes go, you want to plan how much you got to pay, all that stuff. But when you're on 1099, it's going to make a huge difference. So you really need to plan it out. This way, I'm gonna kind of break it down so that when you guys do have this question come up, you can go through it, figure out what's best for you. Trying to get the amount of text messages I get related to, hey, I'm getting a car, which I love helping guys out, but there's certain things that I need to get to where you can watch a video on it. That way I can actually scale. So biggest thing, this is the number one question I get. It's every day, multiple times. What should I do when I purchase my vehicle? Well, first of all, you've got to do the tax planning video and see how much of a break you need for this year. So if you do the tax planning video and you realize that you're going to have profit of $70,000 plus, well then it's going to be important that you get a big deduction. If you do it and you realize you're at $20,000 in profit, it's not that important that you get a big deduction. It'll be more about what type of vehicle you want at that point. If you really are a small car type of guy, you want to get your income down in other ways because you're not going to get a huge deduction. But for that guy that got his profit down to $20,000, he's fine to go ahead and get a small car. So with a small car, you're going to want to lease. So small cars, you lease them. And that's going to be expensive small cars. If it's a cheap small car, just buy it. It's not going to do anything on your taxes because you're just going to take mileage. But in this case, let's say you've got a $120,000 Audi that you've been looking at and you really want to get it. You probably contacted me asking me about it and I told you, well, I'd rather you got a truck like Ford Raptor, or maybe you're like me and you're going to get the new Tesla truck, tri-engine. But you can also get an SUV, any type of SUV, whether it's a G-Wagon or a Grand Cherokee. You can deduct the entire thing. It's just got to be 2018 or newer. So if it's 2018 or newer, you want to purchase it if it's a truck or an SUV to save you on taxes. So we're going to go 2018 or newer truck or SUV when you need a big expense. And what I mean by that is when you need to lower your taxable income, because you're already at $70,000 in taxable income after taking all of your expenses. Say you started at $200,000, you got down to 70, you're still looking at a pretty big tax bill. Well, you go ahead and you buy yourself a new Tesla truck if it were out yet, and now your taxable income is zero. So that's super important. But if you're at $20,000 and you're just a car lover, you've got $20,000 in profit, you're a car lover, go ahead and let's say you made $200,000, you got down to $20,000. Go ahead and get yourself that car that you love that's an expensive small car because you're going to lease it. Let's say it's $10,000 down plus $1,000 a month. So now you're at $32,000 that you spent on it that year. So you kind of went a little bit overboard on what you needed for expenses because now you're at a negative number. But the fact is now you don't have any taxable income. You're not paying any tax. Also not advisable if you're trying to get a rental property, but watch the rental property videos. If you're a rental guy, you definitely want to do this strategy here where you're buying, because we can take the 70 off and you don't pay any taxes, but then we can add it back on when you go to get a home. So you're at 70,000 for a home. That's super important because do a rental property on top of everything else you do, and you're just compounding your net worth even more. But yeah, the great thing about these vehicles is just the huge deduction that you can get. It's tough if you're a small car guy. I love small cars myself, but I'm doing the Tesla truck. It's that much better of a tax outcome that I really think you should go with getting an SUV or a truck. But just know, keep in mind what the difference is, because this car here, you're going to take the $32,000, but each year after that, you're going to take the $1,000 payment a month, so it's only going to be $12,000 each year after that. But still nice. You're also going to take gas, repairs, maintenance, insurance. So make sure you're tracking all that stuff. You'll no longer take mileage on a vehicle that you've depreciated. So that's one of the important things to know as well. That's why you don't use this car out during the summer. When you're selling or doing whatever your daily job is, you use this vehicle for recruiting. If you're a door-to-door guy, it's really important that you're not wasting all those miles. Have a separate $10,000 car that you use for the summer. Yeah, if it's a 2017 or older, you're going to run into some issues where you have to take Section 179 deduction, so you need it to be over 6,000 pounds. So if it's 2017 or older, it needs to weigh 6,000 pounds or have a 6-foot bed. So it would be a truck in that instance. So it would need to weigh either 6,000 pounds, whether an SUV or a truck, or it would need a 6-foot bed. So some people like the 2017 or older Tacomas. Make sure you get the long 6.5-foot bed Tacoma, not the 5.5 foot. If it's the 5.5 foot, then you can't take the 179 deduction for the full amount. So you really want, you just really want to make sure it's over 6,000 pounds if it's 2017 or older. I highly recommend though getting 2018 or newer if you're going for the big, awesome recruiting vehicle. But yeah, hopefully that helps you guys out on this. If you have a more complex question, of course, please send us your request. We'll make a video on that as well. Thank you.